do these insurance terms mean? I get so many questions about insurance from my small and mid-sized business clients, so I know there's a need for good information and assistance out there. This two-part video special is intended to act as a primer on business insurance basics. Today, I'm going to go over some fundamental terms and concepts, and then in my next video, I'll walk you through some of the most common types of business insurance products and the circumstances in which obtaining them may be prudent. By necessity, these videos will be pretty generic and high-level informational and educational overviews. Before you make any insurance-related decisions, you should speak with your attorney, or even better, speak with an insurance advisor or broker who understands the specific risks and needs of your business, your budget, your applicable market, and so much more, so you can obtain the best coverage, pricing, tailored expert advice, and individualized support. So let's jump in, starting with some very basic concepts. Coverage limits. This means the maximum amounts an insurance company is going to pay for a covered loss. The policy may specify limits on total coverage for any particular incident, that is, per claim or per occurrence, as well as aggregate limits on total claims brought during the policy period. Deductibles. This is the amount you need to cough up toward a covered loss before the insurance coverage will kick in. So, if you have a $1,000 deductible and you suffer a $10,000 loss to your inventory, you'll need to pay $1,000 toward that loss, and then the insurer will cover the other $9,000, assuming the conditions for coverage are otherwise met under your commercial property insurance policy. Premiums. Now, premiums are the payments you must make to the insurance company to obtain the policy and maintain coverage. Most folks are reasonably comfortable with those types of terms, so let's dig a little deeper into some fundamentals that are more often sources of confusion. The term declaration. Now, the declaration or the Dec Page might sound complicated, but it's really just the section of your policy that summarizes key information about the policy itself. It'll contain the name of the insured, which in this context is probably your business rather than you individually, the policy period, the coverage limits, deductibles and premiums that we just discussed, and any specific inclusions or exclusions. Now, inclusions just means the specific types of coverage that are expressly included within the scope of the policy. With some exceptions, a commercial general liability or CGL policy is often the most important type of insurance coverage for most small business owners. Your CGL policy might provide specific inclusions for premises liability, products liability, and mobile equipment, just for example. A client might also require certain types of coverage that specifically be listed as inclusions before they'll hire you on. Now, exclusions set forth the specific situations, conditions, or types of damage that are not covered by your policy. So, your CGL policy might state that damage resulting from your or your employees' intentional acts or illegal activities are not covered. Again, your clients might also have certain requirements as to what is not excluded. For example, a construction contract might have a provision for requiring no exclusion for XC&U, that is, explosion, collapse, and underground hazards. Your lawyer or insurance advisor can help you understand this stuff when it appears in contracts you're being asked to sign. Now, conditions. These are provisions of the policy that you and your business must comply with in order to obtain coverage and ensure that it remains in effect. Particular conditions may depend on your industry and the type of policy, but they include things like maintaining safety or security standards, internal policies and procedures, record keeping and reporting requirements, and similar such obligations. Now, finally, I want to briefly touch on a few concepts that are built into the insurance section of many standard corporate forms of commercial contracts, things like consulting agreements, master services agreements, vendor agreements, and so forth. The term endorsement is really just another way of saying amendment. If you get an endorsement to your insurance policy, you are making a special amendment to the policy to modify its terms or coverage. An endorsement might add coverage or change existing coverage, or add an additional insured, or otherwise amend your existing policy as needed to comport with the terms of a client's requirements for doing business with you. The term additional insured comes up when you might be required to add your client or a customer as an additional insured to your policy through endorsements, which will then provide them with the coverage and protection under your insurance policy for claims arising out of your business's work. The term subrogation comes up if your insurance company pays your insured business for a loss that was caused by a third party. Subrogation is the legal process by which your insurance company can then essentially step into your shoes and seek to recover that amount from the at-fault third party. Now, you're most likely to see this in a contract where your client requires a waiver of subrogation. This is intended to protect the client from being sued by your insurance carrier to recover the cost of the claim paid out to you. You cannot do this unilaterally. You will need to inform your insurer, presumably at the same time as you're adding your client as an additional insured, that the client requires a waiver of subrogation endorsement to do business with you. Now, be aware that the insurer might condition its agreement to this on your payment of an additional premium or fee, since the insurer is giving up its right to recover from your client, even if that client was at fault. The term certificate of insurance is a document that's issued by your insurance company that provides evidence of your types of coverage, policy limits, effective dates of the policy, and so forth. It is a requirement under many commercial contracts and commercial leases to prove that you have the coverage that you're required to maintain under that agreement. Okay, I know insurance matters can be dull, so great job on sticking it out so far. These are fundamental concepts which will be critical to understand, at least in a general sense, when you talk about your specific needs with your attorney or advisor. Please stay tuned for part 2, where we'll go through some of the various insurance products that exist out there for small business owners. And in the meantime, let us know in the comments. What other terms or concepts relating to business insurance do you think are complicated or confusing?